Let's get into some of the technicals now with Tony Sycamore from IG. And I guess, Tony, notably, we're seeing these geopolitical tensions really affect oil prices here with this Israel attack on Hamas.
Yeah, that's right, Jules. We did see crude oil spike higher overnight on the news that Israel had targeted Hamas. It wasn't sustained, though, so there was some talking back in terms of Israel and the US saying it wasn't going to be an ongoing military procedure, if you like. And crude oil did come back lower. And what we can see here is it seems to be fairly happy within a range there. You can see there's been a double low struck down at 61.45. And towards the top end of the range we've seen recently, you've got that 66.03 high, and then the 200-day moving average, which is coming in around 67.25. So by and large, crude oil, like a lot of markets, it has reacted, but the reaction has been somewhat more subdued than we might have seen. And I think that probably is a symptom of volatility in markets. There's a lot of uncertainty out there at this point of time. And crude oil has also got that increase in production from OPEC hanging over the top of that market as well. So at this point of time, it has made cautious gains, but whether it can sustain it or not, I'm not entirely sure.
What about gold, Tony? We know these expectations that the Fed is going to cut rates this month is continuing to push movement in gold, but does it hold around these records?
Well, a fresh record high overnight, Jules, up to 36.74. It's been a trade which we've really liked. We've chatted about it a lot over the past couple of months, and it broke higher about 2 weeks ago. And I think it's probably, you can see the RSI is well into that overbought territory, which probably warns that the trend is maturing. You saw some profit taking, I think, ahead of the PPI and CPI data. And that makes sense to me because the expectations or the risks to that data are to the upside. Not that it will change the Fed's decision ahead of next week, but it may reduce the likelihood of those 150 basis points of interest rate cuts, which the US rate market is now factoring in towards the end of 2026. So a lot of priced in, but it's going to be harder for them to deliver on those if inflation continues to tick higher. So that's something I think played a mind in both the gold traders we have out there and also in the currency traders.
Interestingly, though, Tony, despite that fresh record, not seeing so much upside momentum in gold stocks here locally. And in fact, the overall market pretty flat. But where would we see some potential resistance or the ASX trying to claim higher here?
Yeah, the ASX 200 has been doing its own thing a little bit of late. You've had US equity markets, pushing up towards those record highs, but there was a very sharp sell-off this time last week. Actually, it was Tuesday last week. It occurred at the start of a new month, and I was quite stunned by the severity of that sell-off, because against the backdrop of Asian equity markets rallying, against the backdrop of US equity futures rallying, it seemed to be something very specific to the Australian market, and the ASX 200 hasn't been able to recover from that sell-off. And the way things are looking, and the way I'd like to see it play out, is fantastic run up 25% from those April lows. It would be not totally out of the ordinary if we were to see a 5% pullback. So I'm looking for another leg lower in the ASX 200, back down towards that 8,600 area, which was a level which held for most of July. And that would give us that nice 5% pullback. And from there, I think the ASX 200 probably can continue higher. But at this point in time, I see it as being in a corrective phase. And as part of that correction, would like to see it pull back just a little bit further down towards 86.30-ish.
The Aussie dollar, though, Tony, yesterday above 66, I think getting close to 66.2, but it's pulled back a little bit.
Yeah, that's right. So again, we saw those BLS labour market revisions. They were at the high end of expectations, but in line with the whisper number. And then you've got the PPI and CPI data coming out tonight, which probably will be a little bit, it's going to be uncomfortable. Inflation is well above the Fed's target, yet they're cutting interest rates with inflation well above target. And of course, US equities at record highs. So there's some interesting things going on out there in the world at the moment. And one of the things which that meant for the Aussie dollar was some squaring up of Aussie dollar longs. So you saw it head up, hit that 66.19 high, but the US dollar was broadly supported after those BLS labour market revisions due to short covering for the reasons which we mentioned. Just potentially some hotter inflation data about to come onto our radar over the next 24 to 48 hours.
All right, can't let you go without asking about Bitcoin, Tony. What's it doing?
Well, Bitcoin has actually been remarkably quiet for Bitcoin, Jules. You can see it's been in a range for the past 5 or 6 days, really between 110,000 and 113,500. Extremely unusual for Bitcoin, but I guess probably a little bit of, as we mentioned, the low volatility environment we're in. And for Bitcoin to make that next move, I think we're waiting for a fresh catalyst. And in the interim, I suspect Bitcoin can continue to play out that correction which we've seen from the August high up around 124,000. I think that could play out for another month or two. I mean, it's had such a fantastic run. There's a lot of uncertainty out there. It's certainly not being held in the same light that physical gold's being held. And with Bitcoin still, to me, caught between that split personality which it has, is it a safe haven or is it a risk asset? To me, it's still a little bit of a risk asset, which does suggest that, sitting at the very pointy end of the risk spectrum, you probably want to be a little bit mindful that Bitcoin has had a good run, and with this uncertainty into year end, it can maybe just continue to consolidate for the next month or two.